Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. I'm so glad you're here. What's going on in the stock market today? Actually, I don't know. This was recorded last night. Had some early appointments. Going to be gone most of the day, but I wanted to talk to you guys. Wanted to get a video out for you guys. Let's talk about Michael Berry. Michael Berry was a big short guy, right? He shorted the housing market, got it right, made millions of dollars. Well, right now he's got a $1.6 billion bet to the downside, betting against the QQQs, betting against the SPY. He's got these puts and he's got a lot of them. He thinks we're going down a lot lower. I tend to agree with him a little bit. Now we're sitting right on that 50-day. Now we're trying to bounce off of it, but eventually we're going to break through it and head down lower to the 200-day. Now why do I say that? Well, I say that because things like the HYG. The HYG is the junk bonds. That's giving up. It's giving up. It's dropping, right? And that's telling us the market's going to come in. What about the XLF, the financials? Financials took a big hit, They're coming down. Now, maybe they're bouncing today. I don't know. I'm not here. I'm just artificial intelligence today. It's not really Tall Mike. But let's get over to the real estate market, why we can here. All right, so why am I calling for this super crash? Super crash, right? Doesn't that sound scary? Look, this is not just going to be the United States. This is going to be worldwide. Now, China, their housing market is coming down. It's actually starting to break. It's starting to plunge. Last year was the Evergrande situation. Evergrande was the big Chinese developer there and lender. And what happened? Well, they got in trouble. They couldn't make their payments. They were starting to default. But just like we do in the United States, the government came in, bailed them out. You see, they have a big debt problem also. They print money, more and more money. And so that's what happened to the Evergrande situation. But now we have this Country Garden situation. Country Garden's about 4 or 5 times larger than Evergrande, and they're now starting to default on payments. $7 or $8 billion worth of payments are going to be defaulted on by the Country Garden. So they have big problems, and their real estate market is starting to plunge. Now, the Chinese real estate market, oh my goodness, it's like one of the largest assets in the world. And when that starts to come down, you're going to feel the ramifications all throughout the world. What it does, it's going to suck liquidity out of the marketplace all throughout the world. This is going to bring the super crash. Now, we're already getting a big crash in the U.S. in the commercial side of things. The commercial side of things down already about 50%. Now, a lot of that's not being talked about. They're trying to cover it up, but they can't refinance these loans because the values have already dropped by 50%, and this is going to put a big problem on the banking industry, and the banks are starting to fall one by one, starting to fall like dominoes. This is going to be a super crash. Look we blew up these bubbles. These are the everything bubble, right? The stock market's in a bubble. The real estate market's in a bubble. It's just not us. It's all around the world, but it's starting to come down, starting to plunge, starting in China. Big, huge market starting to drop, starting to fall, starting to plunge. This is going to have ramifications around the world. It's going to have ramifications in the U.S. Now, China, like us, is in trouble because they got too much debt. We have too much debt, and things are starting to happen really quickly, right? Okay, so like tip for us, let's take the United States, for example. Okay, so the United States, it took us over 200 years as a country to get to $1 trillion in debt. Now, when did we hit $1 trillion? We hit it in 1981 was the first time that the U.S. went $1 trillion in debt. All right, so how long did it take us to get from 1 trillion to 10 trillion? Well, it took 27 years. So from 1981 to 2008. Okay, and then 2008, we were $10 trillion in debt. Nobody could believe that we were in so much debt, but that's nothing, right? 2008, that's nothing, because that's when we had that subprime crisis and our real estate market started to come down. So what have we done? Well, we got desperate, right? We got desperate and we put all this stimulus into the market. We put all this quantitative easing out there and we printed money to blow up the bubble even bigger. See, we were in a bubble in 2008, much bigger bubble right now, right? So in 2022, we hit 30 trillion. $30 trillion in debt, right? Well, 2023, right now, we're already $33 trillion in debt. Things are happening faster. The ascent of the debt is going faster. And it has to. It has to. They can't slow it down at this point. Look, if they stop printing money, this whole thing comes crashing down. So they got to try to keep it alive as long as they can. Kick the can down the road as far as they can. Now, where they're running out of road, right? All right. So just this year, our budget deficit so far is 1.6 trillion. Now, we're only in August. We'll hit over 2 trillion. Probably closer to 3 trillion by December. But right now we are spending 1.6 trillion more than we brought in. Just in July, we spent $221 billion more than we brought in. We spent $497 billion. We only brought in $276 billion. Now, Bidenomics will tell you these are great times. These are the best of times. So why can't we live within our means? Why do we have to print more and more money? Why do we have this spending problem that is sending us out of control? Okay, so here we are right now, $33 trillion in debt in 2023. Stay with me now. I got a point here. This is getting exciting. Okay, not in a good way. If you get afraid, just change the channel. But 2023, 33 trillion in debt, right? Okay, but things are starting to happen quicker. Now, I would argue that within the next 5 years, if we can make another 5 years, we will be at $50 trillion in debt. Right now we're 33 trillion, but remember, we have 100 trillion unfunded liabilities, things like Medicare, things like Social Security, 100 trillion that's not paid for, but 33 trillion in hard debt, and the Fed has 9 trillion on their balance sheet. So I say within 5 years, we will hit 50 trillion. Okay, just common sense, right? Common sense. We're going to hit 50 trillion. Probably 5 years. Some people think it'll take as long as 10 years. I think that's way too far out. I think we'll hit it within 5 years. Could be sooner because we live crisis to crisis, and each crisis costs us trillions and trillions of dollars. But I think we'll hit 50 trillion within 5 years if the dollar is still around. Okay, then we'll talk a little bit more about that. But let's say 50 trillion. What will interest rates be? Well, I'm just going to use a number. Let's call it 5%. 5%. So you got $50 trillion 5 years from now, 5%. So that would be $2.5 trillion just to pay the interest on the debt. But yet nobody's talking about this. Nobody cares about this. Why? Why don't we talk about this in the government? Well, you can't get reelected that way. You got to tell the people all the free money you're going to give them. If you tell them you're going to stop printing money and you're going to be fiscally responsible, they will throw you out of office, and that's a fact. You have to lie. You have to say everything's going to be okay. But everything is not going to be okay, right? So there's going to be 50 trillion in debt. 2.5 trillion will go just to pay the interest, and they'll leave the government about 1.5 trillion to run the government. But how can you run a government when over 50% of the money you bring in just goes to pay the debt? You can't. You're insolvent at that point, and you will come crashing down. You will lose power. What I'm talking about is the dollar. The dollar's going to go away. They can't live right now. The cost of living is too high. Look, your wages may be going up, but they're not going up enough to keep up with the cost of living. So there's what's called the misery index. Every year that this continues, the misery index means you get more and more miserable because you can't afford things. You can't afford gas. You can't afford groceries. You can't afford to heat your home. You can't afford to buy a house. Houses are unaffordable. But of course, in your area, houses are only going to go up because that's what your area does, right? There will not be this price correction. I do think that there's going to be a super crash, 40%. And that's not a crash. That's just a correction back to the mean. Now, there could be a crash. Super crash would bring it down by about 80%. But Mike, that's impossible, 80%. It happened in Japan. Their houses went down by 80%. You know how long it takes them to get back to the record high prices? Well, nobody knows because they're not there yet. It's only been 30 years. 30 years just to get back, and they're not back yet. That happened in 1981 in Japan. Now, do we want to be like them, or do we want to start taking some fiscal responsibility? We'll see. I don't think we want to take any fiscal responsibility. I think we just want to continue to spend money. So there's going to be a lot of people with a lot of money problems out there. That's just how it's going to work. And now this is sad. This is sad. You see, as a real estate broker, when people have money problems, well, a lot of calls come in for them to sell their house because that's how they sell their money problems, right? They solve the problem by selling the house. They can't refinance the house because they're locked in 2.8%, right? And they can't refinance at 7.5% if they already got the money problem, so they're actually going to be selling their houses. Okay, what else happens when people have money problems? Divorce rate spikes up. So there's divorce rate goes up. What happens to real estate? More sales for Tall Mike, right? More sales. Look, I've made a lot of money on divorce. You know why? When there's a divorce, all right, a husband and wife, they love each other. They go out, they buy the house. Tall Mike finds them the perfect home, but now 5-10 years later, they hate each other. They can't wait to get rid of the home. So they want to sell it as soon as they can. They put it on the marketplace. Tall Mike sells it, buys them each a home. So he made 3 sales and 1 divorce, right? But it's very sad when people lose money. And there's going to be a lot of money lost. A lot of money lost. People don't see what's coming. Nobody sees what's coming. I'm telling you, you do because you watch the channel, right? We're a small group. We get the Moon Boys on the channel where it's only going to go straight up, and that's okay. We love the Moon Boys. All those Moon Boys think we're going to the moon. But what happens when people lose money? What happens when the Moon Boy, who thinks his Bitcoin's going to be $1 million, all of a sudden Bitcoin gets cut in half? What happens? The Moon Boy gets really sad, and I feel sorry for him when they lose money. But here's what happens. Suicide rate spikes up. Suicides, that's correct. Suicide. Now, suicides, a lot more men, about 4 times more men commit suicide than women. Now, that's very interesting to me because men, we place such a, well, our self-worth is based upon our net worth. And when our net worth goes to zero, our self-worth goes to zero. Believe me, I've lost everything twice in my life. Now, I could probably contemplated suicide, but I'd never do that. I've had too much respect for my family and friends. I wouldn't disappoint them. But just last year, 2022 to 2023 numbers aren't out, but 39,255 men committed suicide. So about 39,000. Women, 10,194 women committed suicide. So about 4 to 1 men to women. Now, women, they don't place as much of their self-worth on their net worth, right? And a lot of times, but what happens? What happens when they don't have any money? See, the man, he said, oh, I'd be better off dead. And he goes out and he commits suicide. It's very sad, very sad. The woman, well, she's married to the man. And when there's no money, she sometimes thinks, well, hey, maybe I'd be better off getting divorced. Do you realize that like 70% of divorces are initiated by women? But okay, so there's going to be a lot of divorces, and that's going to put a lot of houses on the market for sale. And I get a lot of business from divorces. I'm not happy about that. It's a very sad time. And suicide, I've had friends that have done it, and it's heartbreaking. It's heartbreaking. Look, things will get better. The economy's bad. I get that. And there's going to be, well, Biden will tell you it's great, but it's going to get bad. It's going to get really sad. A lot of people are going to lose a lot of money. Now, how can you protect yourself? How can you protect yourself? Well, first of all, I would start to get out of debt. Debt is going to be, it's just going to hurt you. It's going to be a problem for a lot of people. So as quickly as you can, get out of debt. Now, maybe you still got some time. Maybe we got 2, 3, 4, 5 years before this all comes tumbling down, but it's going to come tumbling down. A lot of people are going to lose money. It's going to be very sad. Going to be very sad. So get out of debt. That's rule number 1. Rule number 2, live within your means. So many people in this Instagram age, they want to post up there with their brand new car that they went out and bought, that they're making a $1,200 a month payment on, just so they can get that picture on Instagram. They want to post up all the places they travel to in the world. Look it, live within your means. Those people, they're in debt. Debt, that's right. They have tons of debt. They're going to be very sad, and I hope and pray that they're not the ones that commit suicide, but they will probably be the ones contemplating it for sure, because they lose all their money, right? They're in debt. They can't pay their debt. They're broke. They're flat broke. They're worse than flat broke. They're upside down and sideways. They don't know how to get out of it, so they're going to have a very tough life. So live within your means. You don't need to impress anybody. When I was a young guy, I used to think I had to impress people, especially, well, to get girls to date. I always thought that they wouldn't date me if I couldn't impress them, right? Well, I would spend probably more than I should have back then, and I went broke twice in my life. It's no secret. I mean, I lost everything 2 times, and those are stories for a different day. Getting a little long-winded here. All right, so we're talking about getting out of debt, live within your means, protect yourself with a little investment. A few silver coins. Look, at people tell me, Mike, you got this all wrong. Silver and gold aren't going to do anything for you. Look, at the dollar bill is going away as we know it. The dollar bill is going to become completely worthless. They will reset it. They will reset to something like a digital dollar, and maybe it'll be 10 to 1, 100 to 1 for every $100 you got in cash. You can get one of these digital dollars. There will be a great reset coming. There's no doubt about that. But what you want to do is protect yourself with some real money, some silver, some gold. Not a lot. You don't need to invest a lot. Look, you guys are still going out and spending dinner. You can get a silver coin for under $30, right? I mean, just get a few of those, throw them in a drawer. They may save you sometime. They may be all that you have to spend. That's just my advice. You do what you want to do. If you want to keep going out, living beyond your means, keep getting farther and farther into debt. I mean, that's what they teach us in this country, right? Everybody wants to go out and live above their means. Our government is living proof of that. They're the worst example. They are living so far beyond their means that we have a $2 or $3 trillion budget deficit every year. This cannot continue on. Hopefully we get some people with sound minds into the government someday soon. I don't know how it all plays out, but it's going to get ugly. It's not going to be pretty. So do the best to protect yourself. Anyways, I know this was a little depressing today. It's okay. People don't normally watch me on a Wednesday. I'm not here anyways. I'm not really Tall Mike. I'm just artificial intelligence. Get out there, everybody. Have a great day. Bye-bye now.